A 25 bips cut in the interest rate clearly means that for a lot of business owners who have taken SBA loans, their cost of funding has gone down already. That also means that any new loans that they are gonna take, that cost is also gonna go down, and that also means that there is a higher debt service coverage ratio they have. It means that they can borrow more money. Combined with a lower interest rate, the impending Trump presidency is gonna lead to a lot of revitalization in the economic sentiment as well as more economic activity. We also are gonna see a wave of deregulation coming in, which is gonna be very helpful for a lot of small businesses. In terms of response to the latest Fed decision, if business owners had high cost borrowing, they should look at refinancing it with lower cost borrowing. If they had variable interest rate loans, then they have nothing to worry about. In case where they're looking to expand their business in the coming year, then this is a very good time, because we feel that, there'll be a drop in inflation just because of geopolitical issues getting resolved much faster now. And also the energy prices will come down. The other key aspect is that we'll also see more growth coming back into the US economy with a stronger dollar also. And that clearly means that, the businesses need to invest, or to harness that growth. And this is a pretty good time to start doing that. For a lot of banks, the signal around the economy is that, better days are ahead of us. That also means that they have to invest more in digital and digitization, because most of the SMB customers have moved away from brick and mortar, and they are expecting a much better digital experience. So banks will have to do more than what they have done in the past. That also means that, with the new president coming in, we'll see a bigger M&A activity in the banking space. So there's going to be a lot more consolidation. So banks have to either grow in size, or they will be eaten up by other banks, very quickly. And lower interest rate also means that, there is more money which will be there to finance these M&A activities. There's going to be a wave of M&As are coming in. So that clearly means that every bank needs to aim for more growth, whether organic or inorganic, in this environment. And that will spur more lending. That also means that in order to capture more of the lending market, they will have to go digital much faster also. In terms of inflation, I think it's still a little tricky, because in my view, in the short term, we'll see an increase in the core inflation. Obviously, it will also depend on how the energy prices, play out, because that's a major contributor. The other major contributors have been rent, insurance premiums. They continue to rise still. I think the other thing also would be to see that, how some of the economic policies of incoming Trump administration will impact them with increased tariffs. If there's a deportation of a lot of illegal migrants, will that lead to higher wage inflation? And I think the other concern, still the big concern, is a very large fiscal deficit that US is running. So US has to do something around it. And one of the things that Trump administration is saying is that they're gonna cut back a lot on government spending, which in short term will be painful, but at the same point of time, that will send a very strong signal to the markets that the government is becoming more fiscally responsible. So over the medium term, that will be very good, step forward for lower inflation and also for higher growth.